Welcome to Subramani. I'm going to talk to you about the voluntary contributors to the broker welfare fund. I've heard this from my broker friend who used to be the chairman of the company which we were running, and he used to say, "Oh, don't disturb them. These are the voluntary contributors to the broker welfare fund." I'm sure there will be others who would have also named them. Who are these people? These are the people who come to your office. I remember in one of my avatars, I was a member of the stock exchange. They come to your office, they sit, they consume, they love the free tea, coffee, breakfast, lunch, which we used to provide. And they give us a lot of brokerage with the lot of losses that they made in futures and options, right, in derivatives. Now, once in a while, SEBI or I think Zerodha, Mr. Kamath, somebody will come out with a statement saying 99% of the people in the market who are into derivatives lose money, or something like 89% or 99% or something like that. You will come out with this. So SEBI also does a study, and I love the title of the study. So first of all, SEBI is Securities and Exchange Board of India, and their study was titled Measures to Strengthen Index Derivatives Framework for Increased Investor Protection and Market Stability. The title is just fantastic, right? Does it mean that after this study comes out with the report, the losses of the individuals will go down? No. The relationship manager in big brokerage houses, I'm not naming them, big brokerage houses, and their digital advertising will easily tempt you. Every day that I log into the place where I have my equity broking account, every day I'm told that, oh, you're entitled to a 12 crore loan, you're entitled to a 18 crore loan, right? I could do a loan against shares, which means all I have to do is pledge my portfolio and get a 18 crore, 20 crore, whatever I want as a limit, and then buy that and leverage and do F&O, right? All these options are available, and it is constantly pushed to me on a daily basis. So the chances are somebody who sees it so regularly, perhaps he's the same person who is also doing that Dream 11 games, right? So 11 crore people play the Dream 11 games, right? So betting on it. So chances are the 4 crore mutual fund investors are a part of that 11 crores, right? So it's not that these people don't know, but yeah, these people know there is something called mutual funds, etc. But what attracts them is the are the derivatives, right? F&O and things like that. So I would look at some of the numbers. So some notes that I have made. One more thing is, a couple of years back, again the regulator had come out with a study which became famous or infamous, depending on how you look at it, saying 89% lose money or 99% lose money. So it's the second time that a report like this is coming. And while a few readers may want to go into the nitty-gritty, just look at the nitty-gritty. For FY 2023-24, 92.5 lakh unique individuals, like almost a crore unique individuals and proprietorships traded in the index derivatives segment of NSE and cumulatively incurred a trading loss of, hold your breath, 51,689 crores. This figure does not include transaction costs. Further of these 92.5 lakh unique investors, 14.22 made a net profit of approximately 85 out of 100. And then apart from the so-called profit that they made, you have to reduce the transaction costs like brokerage and all those things also, right? STT. You have to take all that out. And then the question is, did any of these guys ever take any money home? The answer is no, because you may have, theoretically speaking, you may have a profit, but that is going to be treated as a speculation profit. So very good chance that you're paying 30% tax on that, and something which you had, which it's just gone, right? So how much is that loss? 51,689 crores, and this does not include transaction costs. So if you add transaction costs, obviously the trading losses would be just more, right? So the per capita loss is going to be quite huge. The presented study, SEBI study, found that the trading losses, the loss makers expended an additional 23% of their trading losses as transaction costs. So some broker somewhere is making a lot of money. And so it has been observed that larger non-individual players that are high frequency proprietary traders or FPI are making the offsetting profit. So if 51,000 crores was lost by the retail individual investor, who won it, who got it is obviously the FII or maybe some big Indian player also, but I don't have that much of data, right? So the sophisticated large operators are maybe taking money away from the retail investors, and they continuously keep losing. The cost, the loss quoted above was 63,600 crores in 2023-24, and that's the basic flow of money here, right? Small investors inadvertently gifted 51,689 to the large operators and paid an additional 11,888 to the brokers and NSE for facility of making these losses. So, I mean, it's easy for us to look at all this and say, do not people make money on the derivative segment? I'm sure they do, right? Because I meet all of them. When I meet somebody and say, do you do F&O? हाँ sir, I do F&O. मेरा कभी लॉस नहीं होता है. I never lose money. So I keep saying maybe 99% of the people lose money, maybe 90% of the people lose money, but I meet the balance. I only meet people who never made losses in F&O, right? So I should perhaps be building a temple for them. So the question is, will SEBI's proposed measures make any difference? I'm very, very skeptical. My view is that 100% success or 100% failure in such cases is not possible. There could be some limits you draw and say, okay, if your net worth is less than 2 crores, you will not be in the derivatives market. You will not do a single trade. If you have not taken adequate life insurance, right? So whatever, put a number, 10 lakhs, 20 lakhs, 50 lakhs, depending on the size of the family, where they are, what they are spending, all that, right? So when you put those locks and say, if you don't have adequate term insurance, if you have not put money in an index fund, etc., you're not eligible to do F&O, right? So something like that is needed, because it is easy to say afterwards that, look, I told you so, you should have done it. It is easy for me to go and blame SEBI for even launching this product and say, why should you launch such a product? But there's a big audience, right? There are more people playing Dream 11 than people who are investing in mutual funds, right? So you have to look at all that and then take a call. Is it really is putting all these conditions, is it really useful, or people will break all these conditions and do whatever they want? Thank you.